The war for gold has officially begun, and what happened in the last 72 hours should terrify every investor holding paper assets. While mainstream media focused on the dramatic capture of Venezuelan President Nicolas Maduro, something far more significant was unfolding in the precious metals markets. Gold exploded to $4,430.72, a 2.3% surge. Silver skyrocketed 4.6% to $75. But here's what nobody is telling you. This wasn't just another market reaction. This was the moment the global financial order began its irreversible fracture. And if you're not paying attention right now, you're about to watch the greatest wealth transfer in modern history unfold without you. Stay with me, because what I am about to reveal involves secret gold accumulation by central banks that's been hidden from public view, a coordinated attack on Western price control mechanisms, and a prediction from top analysts that gold will hit $5,000 per ounce before 2026 ends. The Maduro capture wasn't just a geopolitical event. It was the trigger that exposed the fragility of the entire global monetary system. January 2nd, 2026, the world woke up to news that would reshape global power dynamics forever in ways most people don't understand. Nicolas Maduro, president of Venezuela, a nation sitting on the world's largest proven oil reserves, was captured in a coordinated international operation. Within hours, precious metals markets erupted. Gold, trading stable around $4,300, suddenly spiked to $4,430. But here's where this gets interesting. Silver didn't just follow along, it exploded with a 4.6% surge, dramatically outpacing gold's move. Silver hit $75.94, sending shockwaves through commodity trading desks worldwide. Why? Because silver is uniquely sensitive to geopolitical instability. When nations prepare for conflict, when supply chains fracture, silver becomes the canary in the coal mine. And that canary is screaming right now. The Maduro capture isn't just about Venezuela, it's about what Venezuela represents in the global power struggle that's been brewing for years. Venezuela has been conducting oil trades in currencies other than the US dollar. It's been developing relationships with China, Russia, and Iran. It's been actively working to undermine the petrodollar system that has supported American economic hegemony for half a century. When Maduro was captured, markets reacted because they understand what this signals. The United States is asserting dominance, sending a message to every nation. And precious metals, the ultimate safe haven assets existing outside any government's control, responded exactly as expected. But let me tell you something explosive that's been happening beneath the surface. Central banks have been accumulating gold at unprecedented levels. The World Gold Council reports central banks purchased over 1,000 tons in 2023 and maintained aggressive buying through 2025. Who's buying? China, Russia, India, Turkey, Poland, Singapore. Nations quietly preparing for a world where the US dollar no longer reigns supreme. They're buying gold because they know what's coming. When the current system collapses, gold will be the only universally accepted wealth that survives. And here's what should terrify anyone holding significant wealth in paper assets. These central banks aren't announcing their purchases publicly. They're accumulating through covert channels, unreported transactions, and off-market deals. Analysts estimate actual accumulation could be 30 to 50% higher than reported. The official numbers already show record buying. The real numbers might be dramatically higher. What do they know that you don't? Now, let's talk about price control, because this is where the story gets really dark. For decades, precious metals prices have been manipulated. Futures contracts, derivatives, ETFs without physical metal have allowed major institutions to suppress prices far below where fundamentals would naturally push them. Major banks have been fined hundreds of millions for manipulation. JPMorgan alone paid over $900 million in fines for manipulating precious metals markets. Think about that. They paid nearly $1 billion in penalties, which means actual profits from manipulation must have been multiples higher. But here's what's changing. Physical demand for gold and silver is now overwhelming the paper manipulation systems that controlled prices for decades. When China, Russia, and India buy thousands of tons of physical gold, when industrial silver demand accelerates, the paper games become harder to play. There's only so much actual metal. Eventually, the disconnect between paper prices and physical reality becomes impossible to maintain. The Maduro capture accelerated this process by reminding the world that geopolitical stability is far more fragile than most people realize. When stability cracks, when the veneer of control peels away, investors flee to tangible assets that can't be printed or manipulated. And what we're seeing in the last 72 hours is the beginning of that flight. Gold at $4,430, silver at $75.94. These aren't just numbers. These are warning signs that something fundamental has shifted. Leading analysts now openly predict gold will reach $5,000 per ounce before 2026 ends. Some suggest $6,000 if tensions escalate. Why? Because the fundamentals are overwhelming. currency debasement, geopolitical fragmentation, supply constraints, central bank accumulation, inflation concerns, and financial system instability. Every single factor points in the same direction. Higher gold prices, higher silver prices, and a fundamental repricing of precious metals globally. But let's zoom out. The Maduro capture is just one domino in a much larger sequence that's been building for years. Russia was ejected from SWIFT, forcing alternative payment mechanisms. China has been internationalizing the yuan through currency swap agreements with dozens of nations. The BRICS nations have been openly discussing a new reserve currency backed by commodities, including gold. Saudi Arabia has been conducting oil sales in yuan. Iran has been trading oil for gold. Venezuela attempted to back its currency with oil and gold. This isn't random. This is coordinated. This is a deliberate effort to construct an alternative to the dollar-dominated financial system that has controlled global trade for decades. Every crack in dollar hegemony pushes gold and silver higher. As faith in the dollar erodes, investors and nations seek alternatives. And the only alternative with thousands of years of history, universal acceptance, and no counterparty risk is precious metals. The Western financial establishment has fought this trend. Price manipulation, media campaigns, cryptocurrency promotion, regulatory pressure, and central bank leasing programs. But despite decades of coordinated suppression efforts, the fundamentals are winning. Events like the Maduro capture accelerate the timeline dramatically. Here's what you need to understand. The 4.6% silver surge and 2.3% gold surge aren't the story. These are just opening moves. What's coming is a repricing that will shock everyone who has not been paying attention to these developments. Gold could potentially double from current levels. Silver, historically undervalued relative to gold, could triple or quadruple as industrial and investment demand collide. This isn't speculation. This is pattern recognition. Every monetary system transition in history has seen precious metals surge dramatically. In the 1970s, when the U.S. abandoned the gold standard, gold went from $35 to over $800. In the 2000s, when the housing bubble burst, gold went from around $250 to over $1,900. Now, as we face the most significant monetary transition since Bretton Woods, we're witnessing the beginning of the most dramatic bull market. The Maduro capture is significant because of the message it sends. The United States is fighting to maintain control of a braking system. That desperate attempt to preserve dollar dominance through military power and coercive diplomacy will accelerate the transition away from the dollar. Nations watching will double down on gold accumulation. They'll accelerate alternative payment systems. They'll reduce dollar reserves and increase hard asset holdings. Venezuela's gold reserves were frozen by the United States years ago. Russia's reserves were frozen after Ukraine. Afghanistan's reserves were frozen under the Taliban. The lesson? If you might conflict with the United States, hold wealth in forms that can't be seized. Gold fits that bill perfectly. This is why China repatriates gold from Western vaults, why Russia built massive reserves, why central banks globally buy at record pace. They see what's coming. They understand the rules-based international order is collapsing, and they're preparing for what comes next. For individual investors, the implications are equally profound. If you hold significant wealth in dollars or dollar-denominated assets, you're exposed to serious risks. The dollar's purchasing power will erode as the monetary system transitions. Inflation will accelerate as governments print money to fund uncontrollable deficits. Geopolitical instability will trigger market crashes that devastate traditional portfolios overnight. Precious metals offer protection against all these risks. Gold and silver have preserved wealth through every major crisis in human history. Through wars, depressions, hyperinflations, and the collapse of empires. The analysts predicting $5,000 gold aren't being sensational. They're being conservative. Gold could go much, much higher. Some analysts privately discuss scenarios where gold reaches $10,000 or more. Gold in 1980, adjusted for real inflation, would exceed $20,000 today. So $5,000 or even $10,000 gold is outside historical norms when accounting for currency debasement over time. The question isn't whether precious metals will surge. The question is whether you'll position yourself to benefit before it happens. Here's my call to action. First, if this video opened your eyes to what's really happening, hit that like button and subscribe. I'm covering every development in this story. I'll break down geopolitical events that move metals, analyze central bank patterns, and explain the fundamentals. Second, do your own research. Look at central bank purchases, government debt levels, geopolitical tensions, and mining supply constraints. Form your own conclusions. Third, consider your financial positioning. Talk to a financial advisor who understands precious metals. Consider what percentage should be in tangible assets. Understand that timing matters. Once mainstream investors recognize what's happening and flood into gold and silver, prices will be much higher. Fourth, share this video with anyone who cares about protecting their wealth. The more people who understand what's happening, the better. This isn't about panic. This is about awareness. We're living through a historic transition. Those who prepare will come out ahead. The war for gold has begun. Western price control is breaking down. Central banks are accumulating at record pace. Geopolitical instability is accelerating everything. The Maduro capture was just the spark. The real explosion is still to come. Stay informed, stay prepared, and I'll see you next time.